In 2015, the Indian ice cream market was valued at approximately 70 billion Indian rupees. That's around 7,000 crore Indian rupees. That was in 2015. Then in 2024, it was valued at 268 billion rupees. That's around 26,800 crores, presenting a growth rate of 16%. And now, one report estimates that the Indian ice cream market, is expected to grow to 1 lakh 7,800 crore rupees by 2033, presenting a very impressive growth rate of 16.7%. So it's estimated, at least by this one report by this company named iMark, the market is going to become even more massive. And in the middle of all this, we have Vadilal. Now, Vadilal, very beloved, very well known Indian brand. I think it's Indian. Yeah, it's Indian. Very beloved, very well known Indian ice cream brand. It currently is estimated to have a market share of around 16%. Now, Amul has a market share of 40%. They dominate India's ice cream industry, but Vadilal seems to be second at 16%. And from what numbers I could find, their market share is actually slightly increasing, estimated around 12 to 14% in 2015. It's not massive, it's only 2 percentage points from 2015 to 2024, but there seems to be a slight linear increase in the market share. Anyways, at least it's maintaining its market share and slightly increasing it. So the question arises, how is Wadlal doing financially? So let's find out. First thing, of course, we're going to look at Screener. I love Screener. Very useful website. So it's currently worth around 3,700 crores, market price of 5,000 rupees, PE of 25, book value of 967. Looking deeper here, let's look at the price. Where's the price? Okay. Here we have the price. Yes, this is the price. The company seems to be near all-time highs. Now, if you want all-time highs, now let's see. At its peak, it was worth around 6,800 rupees per share value, which will translate to like 4,700 crore rupees. Right now, it's at 5,200. Still, it's near all-time highs when talking like historically speaking. Historically speaking, it seems to be near all-time highs. So, how exactly is doing financially? So, first, let's look at profit and loss here. Yeah, now we have here sales. If we move here, we can see all the years of the sales. We have 2014, we have 2015, 2016. So moving on, first 2025. 10% sales growth when compared to 2024. Sales reached 1,238 crore rupees. Now, screener numbers are not always right, but they are extremely close to what the actual numbers are. So let's take this at face value. 10% growth, 6%, 50% growth in 2023, 2022. Of course, the COVID resurgence. Before that, it was a decentish growth. There, yeah, 4 years, 4 years, 2018, there was double digit. 2019, 2020, a bit slower, but still. Now, if you look at operating margins, OPM, operating margins, 11%, 13%. By the end, they seem to be 19%, 16%, 20%, even before COVID in 2021. You can see 2020, 2019 operating margins were 13%, 9%, 12%, 13%. So they seem to be on the rise. To see this even more clearly, we have this. Now, compounded sales growth, 10 years, 12%, 5 years, 16% compounded sales growth. Last 3 years, an amazing 21%. compounded profit growth of a massive 55% in the last 10 years. Of course, last year or trailing 12 months, which is the last 12 months, profit increase is only 3%, which is because it paid less tax in last year. So keep an eye on that. Operationally speaking, its EBITDA did have a significant increase. So last 3 years, a profit growth of 50%. So it may have operating leverage, a stock price growth far outpacing the BSE Sensex and Nifty 50, and this is very good, a rising return on equity. 10 years ago, 20% return on equity, still extremely high. 3 years, 27%. Last year, 24% return on equity. Other thing we can see is, yes, return on capital employed. Yeah, ROCE, the last thing, return on capital employed. Now, 2014, this was around 10%. 2015, 10%. 2016, massive rise, 18%. And moving, scholars. Okay. Elevated rising increased return on capital employed, meaning it's getting a higher return, it's making more money on whatever capital it's employed in 2025 than compared to previous years. 2025 return on capital employed was 25% in 27% in 2024. Basically speaking, return on equity is rising, so is return on capital employed. So just seems to be revenue revenue growth is solid, profit growth is seems to be solid. It's becoming more efficient when talking about at least ROE and ROCE. Taking a bit of a deeper look at its financials, if you look at this, right, in this section, we have interest. Let me zoom in. We can see the third row below operating profit, we have the interest payments, 25. Now, if we compare operating profit to interest, that is known as the interest coverage ratio. If it's more than one, that's very important. Less than one, kind of becomes dangerous, but still industry specific. Some industries have different industries have different interest coverage ratios. Basis like you should at least have this, at least have that standards. That's what I should have said. Different interest coverage ratio standards. So if we move to 2025 latest figures, 238 and 14, 238 of EBITDA compared to 14 interest, extremely large. I think it's not 20, but it's more than 10, it's more than 15. And that's a very comfortable interest coverage ratio, basically meaning that Vadilal, thankfully, has no problems paying off any of its debt. So now we have one more stat to see. That is the cash flows. And this is a place where it's not looking, let's say, that amazing. Now let's make myself smaller. This is cash flows. Cash flows consolidated. The problem here, it's not consistent. Now you can see 55. In 2019, it's 44. 2014 it was 55 crores cash from operating activities. We move to 2025. We can see 130, but it just elevated to 192 in 2024. But it's never been consistent. I don't know if this 130, 192, is it actually sustainable or not? We can look deeper into this. Yes. So here we have the working capital changes. Yeah, working capital changes. We divide this from profit of operations. When it's positive, then we add it. It's minus, then we subtract it. Working capital is current asset minus current liabilities. But when you're talking about current assets, it's not all current assets. It does not include cash and cash equivalents. And I believe it does not include current investments. I hope so. Here you can see it includes receivables, inventories, payables, loans and advances are also included. So current liabilities here includes, I believe, payables. But overall, if you see the working capital changes, uh, it's more positive, it's more negative. Of course, taxes will rise, they have to pay more taxes. It's not really that consistent. We can't really see. So the cash flow and basically the free cash flow, the cash flow from operations and then leading to free cash flow is not doing that well. Now, free cash flow is a very important metric. You can check it out on Google if you don't know. But this is the one place where Vadilal is not really performing that well. So moving on, if you go to its one only, what is this? What is this? Yes, this is the annual report, the 2024 annual report. I don't know if they have the 2025 annual report. Now here, there are a couple of interesting stats. One is on page 187. Now I'm back. Now here, let me show you this. Let me show you this. First, we have revenue from operations, right? Let's go a bit down. Let's go a bit down. Yeah, now you can see this. Let me zoom in. Let me zoom in. Yes, this is revenue. This is revenue. Sale of products. So in 2024, 742 crore rupees were made of sale were done in India. However, 382 crore rupees of sales were done outside India, for a total of 1,125.33 crores. Now I have a calculator here. Now if we divide 382.71 by 1125.33, it seems that a massive or a substantial 34% of revenue actually came from outside. It came from internationally. It came from outside India. So that's international business, that's exports. Very impressive. Here we can see it was 333 crores in 2023, close to 382 crores. Massive 40 something crore jump, 8% growth. Very nice, very nice. And the other thing we can see here is page number 157. Let us go there. Boom. This is the consolidated balance sheet of the company. Let me make myself a bit smaller. Okay. Now we're gonna go here. You're gonna go here. Yes. So we can see here current assets 433 crores. I hope everyone can see this figure. Dominated by, of course, inventory. Second highest thing we have are trade receivables. So 433 crores. So let's take our calculators. 433.23 crores. Then we go down, we see current liabilities 300, sorry, 214 crores, 214.14 crores, dominated by trade payables, dominated by trade payables. Now, if we divide these figures, it comes out to current ratio, that is current assets minus current liabilities of 2, which is more than 1, which is always good. A current ratio more than 1 is always good to see. Anyways, I think the video should come to an end. So, what is the gist? How is Vadilal doing financially? Now, debt wise, there seems to be no big issue. Overall, we saw its interest coverage ratio was very, very healthy, a very healthy interest coverage ratio. Current ratio was also 2. Its return on equity, its return on capital employed, both are rising. Revenue is seeing nice growth. Overall speaking, 12% annualized revenue growth last 10 years, 50% profit growth, massive operating margins on the rise, net profit margins, at least post COVID, are on the rise. What else was on the rise? Return on capital employed, return on equity. So investors seem to be now getting more return on equity, and its operations seem to be more efficient, at least judging by returns on capital employed. We can also see here, dividend payout ratio. Make myself smaller. Dividend payout ratio, it's for different years. So this is for 2014, 33%. Moving here, it's a bit low. Yeah, 10%, 1%, 1%. Dividend yield of 0.03 is kind of sad. But its stock price, it did very well, growing at 20% annualized in the last 10 years. Overall, Vadilal, second largest ice cream company in India. The Indian ice cream market seems to be growing very fast. It will continue, or at least estimated to continue to grow. Estimated to grow very fast, at least till 2023. And one more fun thing we can see here is this. This is the per capita ice cream consumption here in liters. Here we can see India is 1.6, very low compared to China's 4.3 liters, extremely low compared to New Zealand's 28.4 liters. So overall, the ice cream market in India seems to be a very fast-growing market, and Vadilal here is the second largest. It has experienced good revenue and profit growth, seems to be getting more efficient. It's just lagging, it's just maybe lagging in the cash flow and free cash flow department. So that's it. Hope you have a nice day and a nice life.